The Bank of Canada is at a crossroads, facing a critical decision that could shape the economic landscape for months to come. They need to make a decision about interest rates, a decision that will impact businesses, consumers, and the overall economy. Will they cut them again, continuing their efforts to stimulate economic growth? Or will they hit the pause button, taking a moment to assess the current economic conditions? The financial world is watching closely, with analysts and investors eagerly awaiting the bank's next move. The Bank of Canada's decision will have big consequences, influencing everything from mortgage rates to business investments. They have been cutting rates for a while now, trying to stimulate the economy and encourage spending. But now, there are signs things are changing. Inflation is creeping up, and the cost of living is rising. The job market is looking shaky, with unemployment rates fluctuating and job security becoming a concern for many. The Bank of Canada needs to decide whether to continue with rate cuts or to take a different approach. Is it time for a change in course, or should they stay the current path? The upcoming announcement from the Bank of Canada is generating a lot of buzz, with everyone speculating on what the decision will be. Experts are weighing in with their predictions, offering insights and analysis on the potential outcomes. Market analysts are crunching numbers, trying to forecast the impact of the bank's decision on the markets. Everyone wants to know what the Bank of Canada will do, as their decision will have far-reaching implications for the economy. Inflation is on the rise. This is a big concern for the Bank of Canada. Their goal is to keep inflation in check. They aim for a sweet spot of around 2%. But recently, inflation has been creeping above this target. In February 2025, inflation hit 2.6%. That's an 8-month high. It's a sign that prices are rising. This can erode the purchasing power of Canadians. It can make it harder for people to afford basic necessities. The Bank of Canada is worried about this upward trend in inflation. They don't want it to get out of control. Cutting interest rates can sometimes fuel inflation, so the Bank of Canada might be hesitant to cut rates further. The job market is another piece of the puzzle. The Bank of Canada keeps a close eye on employment numbers. A strong job market is a sign of a healthy economy, but recent data has been worrisome. In March 2025, Canada lost a whopping 32,600 jobs. This was the first job loss in 3 years. It's a red flag for the Bank of Canada. It suggests that the economy might be slowing down. The Bank of Canada wants to see strong and sustainable job growth. Cutting interest rates can sometimes boost employment, but if the economy is already weak, rate cuts might not be enough. The Bank of Canada needs to weigh its options carefully. Section 4. The Tariff Tango. A brief reprieve, but for how long? Remember those tariffs? The ones that were causing so much uncertainty and anxiety for businesses and consumers alike? Well, there's been a bit of a break. The US president recently backed off from imposing sweeping tariffs. This is a welcome development for Canada, as tariffs are like taxes on imported goods. They can disrupt trade and hurt the economy. The threat of tariffs had been hanging over Canada's head, creating a lot of anxiety for businesses and consumers. But now, there's a glimmer of hope. The pause in tariffs gives Canada some breathing room. It reduces the urgency for the BOC to cut rates. However, it's unclear how long this reprieve will last. The trade situation remains uncertain. The ones that were causing so much uncertainty? The ones that had everyone on edge, from small business owners to large corporations? Well, there's been a bit of a break. A momentary pause in the storm. The US president recently backed off from imposing sweeping tariffs. This decision has brought a sigh of relief across the border. This is a welcome development for Canada. The nation can breathe a little easier, at least for now. Tariffs are like taxes on imported goods. They can disrupt trade and hurt the economy, making everyday items more expensive. They can disrupt trade and hurt the economy. Businesses can suffer, and consumers can feel the pinch. The threat of tariffs had been hanging over Canada's head. It was like a dark cloud looming over the economy. It was creating a lot of anxiety for businesses and consumers. People were worried about the future. But now, there's a glimmer of hope. A ray of sunshine breaking through the clouds. The pause in tariffs gives Canada some breathing room. Businesses can start to plan again, and consumers can feel a bit more secure. It reduces the urgency for the BOC to cut rates. The financial markets can stabilize, at least temporarily. However, it's unclear how long this reprieve will last. The clock is ticking, and the future remains uncertain. The trade situation remains uncertain. The global economy is interconnected, and any changes can have far-reaching effects. Section 5. Reading the tea leaves, market signals, and past actions. The financial markets are buzzing with speculation. Every day, traders and investors are glued to their screens, analyzing every bit of data they can find. Traders and investors are placing their bets. They are constantly trying to outguess each other, looking for any edge they can find. They're trying to anticipate the BOC's next move. Will the Bank of Canada cut rates again, or will they hold steady? The odds of a rate cut have been shifting. Market sentiment is a fickle thing, influenced by countless factors. As of April 11, 2025, the market was giving a 58% chance of a pause. This is a significant shift from just a few weeks ago. This was a significant change from earlier predictions. Analysts and traders alike were caught off guard by this sudden shift in market expectations. It suggests that the market is starting to price in the possibility of no rate cut. This is a stark contrast to the previous consensus. The BOC has already cut rates aggressively over the past year. Their actions have been aimed at stimulating the economy. Since June 2024, they've slashed the key borrowing rate by 225 basis points. This is a substantial reduction. It now sits at 2.75%. This rate is considered to be within the neutral range. This is the middle of the BOC's neutral range. The central bank's decisions in the coming months will be crucial for the economic outlook. Section 6. Experts at odds to cut or not to cut, that is the question. Economists and market watchers are divided. Some believe the BOC will cut rates again. They argue that the economy needs more stimulus. Others believe the BOC will hit the pause button. Tony Stillo, an economist at Oxford Economics, thinks a pause is likely. He believes the BOC wants to keep some ammunition in reserve. They don't want to use up all their tools too quickly. On the other hand, David Doyle from Macquarie Group sees things differently. He points to the heightened uncertainty surrounding trade and inflation. He believes these pressures could push the BOC to cut rates. Section 7. The bottom line, a balancing act with high stakes. The BOC faces a delicate balancing act. They need to weigh the risks and benefits of their actions. Cutting interest rates could provide a short-term boost to the economy, but it could also fuel inflation. On the other hand, keeping rates on hold could help to keep inflation in check, but it could also prolong the economic slowdown. It's a tough call. The BOC's decision will have far-reaching consequences. It will affect businesses, consumers, and the overall health of the Canadian economy. All eyes will be on Governor Tiff Macklem when he makes the announcement on April 16, 2025. Stay tuned.